Yeah, I think there's three things that are happening in a credit crunch, and most people don't see them. The first one is, and you and I existed through the last one, the Great Recession. Banks tighten up their credit standards, right? Not only
Absolutely.
does LTV go from 75 to 60, but the box where they say yes just gets ultra tight. And again, a bank will never say they're not lending because that's their business,
Right.
right?
Yes.
That's what they do. But they'll make it so that no is the most common answer.
For
And
sure. And one
I,
of those things for real estate investors that we're often looking at is the debt service coverage ratio. So, a lot of investors that are using DSCR loans, for example, generally speaking, in a normal, healthy economy, banks might only require 1.2 or 1.25% DSCR. So, if your mortgage payment's $1,000, they want the net income before the mortgage to be $1,200 to $1,250 to cover that $1,000. What we start to see in these cycles is that they start to say, wait, you need 135 or 140%. So you must have 1,400 a month in income to cover that $1,000 payment. Or even if you have good credit, it's not going to work. And what that requires you to do is they may say, hey, we're still lending 65%. But if that debt service coverage ratio isn't that new higher number, they're going to lend you even less than that to get the payment down where it needs to be.
yeah. So I think a lot of people, you're going to, that's probably where the average person will see it. Maybe a month ago, they would get a yes answer. Today, they get a no answer. But I think there's two other sneaky things that most people don't get. And this is why commercial real estate's going to feel it where residential won't. And that is that there will be some owners of buildings, commercial properties, who have never missed a payment, never missed a payment, no threat of missing a payment, but their term is up and they must go
Yes.
refi that loan.
That's where the
Um,
biggest risk is today, for sure.
yeah, there's going to be operators who fully expect to get a refi yes. And because that banking institution is starving for capital, they will get a no, which
Yes.
will force
True.
them to refi elsewhere. It could force them to do a cash in refi, a cash in refi. Oh, can you imagine
Yes.
doing that? Or they'll be forced to sell. I don't think enough people are talking about this. There could be some forced sellers because you can't refi a loan. You don't want to cash in refi. This is going to happen.
Absolutely.